Hello, members, and thank you for your company today. And thank you for joining our special webinar from Fat Profits entitled Reporting Season in Full Swing. I'm your host for the webinar, Andre Abieras, and joining me today is our Chief Operating Officer, Patrick Ganley. Welcome, Pat. How are you?
Great, Andre. How are you? And welcome, Ed. It's good to get on this presentation with you guys today.
Thanks, Pat. And I'll be providing a member's perspective during this webinar. What members are saying and what they want out of this reporting season.
Great, and looking forward to the whole webinar. So, before we start, we have to go over the usual housekeeping. Disclaimer, all our presentations are general information only and should not be construed as personal advice. If you are in need of specific or personal financial advice, please contact your financial planner or advisor. And of course, past performance is no indicator of future performance. Now, towards the end of today's webinar, we have our usual Q&A session, and you can ask your questions about the topics we've covered in today's webcast. If you have questions, you can find a submenu on your screen. Type them as they come to mind. You can find that as indicated in the orange arrow here. In case you can't hear us, please call the toll-free 1-300 number at the bottom of the screen here. I'm sure our staff at the office would be happy to help. Wow, we got a good turnout today. A lot of members tuning in today. And as you can see on your screen, the topic today is reporting season in full swing. I'll give the floor to you, Pat and Ed.
Thanks, Andre. Ed, I think what we're trying to talk to investors about here is we're in full swing of reporting season. We've got a number of companies that are coming out with good results and other companies coming out with bad results. But what we do know is that out of this will create some buying opportunities, both in the stock side of things and the sectors that we'll be focusing in on. And at the moment, we're building up a pretty significant watch list of companies that we think are going to be performing quite well or will provide buying opportunities for investors going forward. How do you see all that, Ed? And what's your feedback at the moment in regards to reporting season? Because I know you talk to a lot of investors.
Yes, Pat, absolutely. I'm hearing a lot of feedback about stocks that have hit their targets and their guidance, and stocks that have actually missed. Stocks like Premier Investments. There's been a lot of talk about retail and discretionary spending. Outstanding results. Breville with their appliances. Qantas was outstanding. Then you got BHP, which was a mixed bag, slightly missed and cut their dividends. Then you've got Woolworths, which presented an outstanding result, and then Coles missed. So it's been a mixed season. Wesfarmers on the back of Bunnings with their new pet care range, compensating the renovations boom over COVID, and Kmart has had an outstanding result as well. So it is a mixed bag, and it is a stock pickers market, and that's what we do, Pat.
Okay, thank you, Andre. We'll get on to the next slide now, please.
Yeah, here we have the ASX 200 chart. So on the technical front, right now, you can see that the ASX 200 is still stuck in a broad consolidation between 6,400 and around 7,500. What do you guys think?
Well, I think that's an interesting point, that we have been stuck in a range here with the ASX 200, Andre. But as Ed and I were talking about before that, even though the market is in a tight range at the moment, there are still a number of very, very good buying opportunities for investors. And we're seeing a lot of that materialize through this reporting season. And I think Ed just rattled off, a number of companies that have reported. We know that over the last couple weeks, we've identified a number of buying opportunities for our members, not only with companies that we have in our existing portfolio, but we've started to see new stocks emerge, new companies that we've put into the portfolio that are creating exciting opportunities for investors. And we're really excited about what's happening now because we see more and more opportunities emerging. That's not to say we're going to have them today, Ed, but we're probably going to be seeing more and more companies look attractive, and we'll probably be putting more buy recommendations on stocks over the next few weeks. How do you see that, Ed?
Yeah, the themes are very strong. A lot of the inquiries I'm getting Yeah, we've got a portfolio service here where members can have their portfolio reviewed annually. They can also discuss stocks that they're considering for their portfolio. The lithium theme is still very dominating in this market. We've recently, well, we predicted well in advance the uranium theme, and we've got some coverage on that now. Remarkably, Australia, and also one of the world's largest uranium producers, most people would not even know the name of this company. It's quite bizarre, but we cover it, and another as well. So those are the key themes. And then you've got the long-term members, the conservative members. They're looking for income, and it's been a mixed bag. You know, BHP dropped theirs a little, but then if you look at the forecast of what's coming, that could easily change in 6 months' time. But some of the bigger retailers, you know, there's a mixed bag. Lavisa was down and Premier was up, and there's a mixed bag there. So the key themes right now is China. That is number one on people's lips. Everyone's a bit concerned with what's going to happen in China. So yeah, it is going to be quite interesting the next quarter, and we'll be covering it quite extensively.
Great points, Ed. I just want to add that you know, in a market that's, you know, broadly consolidating, like what you can see here on the screen, you know, having a team of equity research analysts, you know, covering specific names is pretty useful because, you know, stock picking in the sideways market can actually lead to better results, right? I'm sure the members later can see, you know, the effects of the returns. Okay, so next we have the Dow. It does show something similar in the sense that there's a broad consolidation between 2800 and 3600, but more recent price action shows a more bullish bias with higher lows, right? And then you can see it looks like a staircase pattern ascending upwards. So depending on how things change, at least in the US, especially for these names, um, it could possibly lead to a retest of the 3600 resistance zone. What do you guys think?
Well, I think it's interesting. I mean, predominantly we're focused a lot on the Australian stocks, and that's probably the number one service we offer to investors is looking at local based Australian companies. However, we do also provide international coverage. So we do provide investors with looking at opportunities on companies that are listed outside of Australia. And I think it's quite interesting to look at the Dow Jones because basically what the US does impacts what we have here in Australia, but it's still, as you said, going in a range, Andre, and we're still very focused on being what we do best, which is stock picking, looking at specific stocks, sectors, and also looking at sectors that we should avoid. But predominantly, we're excited about this being a stock picking environment, which is one of the specialties of Fat Profits.
That's right. What about you, Ed?
Yeah, look, obviously the lead comes in from the US. The Nasdaq in particular, of late, caused a major rally recently, as we know. It cooled off again, and it's just peeked its head out again, led by the technology sector, the tech sector. Our tech sector here in Australia is dominated by a few companies. You know, we just saw WiseTech recently got smashed, and then Altium basically popped the ceiling out with an outstanding result. So it is a mixed bag. You got Xero, which is charging along, and NextDC, all these data centers. You know, the effects of artificial intelligence. There's been a couple of new floats recently, specializing in AI. There's a lot of activity there, but you've got to be very careful. A lot of these tech companies in Australia are fully valued, very similar to what's happening on the Nasdaq in the US. It is a mixed bag. You know, like look at US, like sporting retailers are struggling, and then in Australia here, it's not so much the case. It's a much bigger market there, and the risk is 10 times higher based on our population here. So we're going to focus on what's important, and we'll keep delivering that to members. In particular, focusing on individual stocks that can outperform the index, and that's what we're focusing on.
Great points. All right, so next we have the S&P 500. So on the technicals, you can see that, you know, that since the start of 2023, S&P 500 broke out of the downtrend. It has been trading well, except for the last few sessions where, in anticipation of what Fed Chair Powell would say, there were some profit-taking activity. You can see a series of red candles here, but last Friday uh, basically tells a different story, right? Um, so there's a bounce back. We could see that in the next few trading sessions. The S&P 500 might resume its uptrend. What do you guys think?
Well, I think it's consistent. I think that's the reason why we put up these three charts, just to show what was happening in the indices. But it gets back to our point, which we keep driving home to investors. It's a stock picking environment at the moment, and we're very excited about what the future holds, and we're very excited about what we're seeing coming out of this reporting season.
Yeah, the
And
index, Pat, the index was up about what here in Australia was up 10% last year. And then most people that I'm talking to that took a bit of risk are saying that they've lost money because they took too much risk on the smaller end of the market. But the ones that stuck to the blue chips, the larger caps that paid very high dividends, came out the other end in positive territory. So it is all about risk appetite at the moment. The index is not going to do the work for you. I mean, obviously, we provide a research service, so we have to provide macro and show that guidance and direction throughout the year and really focus on the macro. But we use that macro to go back and pick the right sectors, the right stocks in those sectors, the ones that we believe will make members money in their portfolios at the end of the day, with a mix of dividends and growth. So the appetite for the smaller end is only really in that energy sector and the battery sector, the renewable sector. That's where all the money is. Everything else has been left behind, lithium in particular. And now we're starting to see another period where members are still cautious. I'm still hearing a lot of caution, but there's still a lot of bulls out there. There are people still emailing me and ringing me up and saying, look, I've got 10K or 20K to put in the market. What should I be looking at now? And generally, a lot of those members are still prepared to take a bit of risk. So the appetite is still there. And that's all on the back of what's happened in the US, in the technology sector. They've watched that NASDAQ rally and they're thinking, well, maybe I'm going to miss out here. So it's all that fear of missing out. So people are happy to put their cash in the market, but they just need to know where to put it. And that's where we can help.
yeah, that's right. That's right. So it's all about picking quality, right?
Yeah.
Okay. All right. So here, Patrick, would you like to share your thoughts on this one?
I think this slide is at the heart of really what Fat Profits can offer to investors. We look to provide strategy and direction, and we do that in a number of ways. Each morning, members or investors that have a subscription to Fat Profits will get a morning email. It's our daily Fat Chat, and that gets the day started. That gives them some good insights into what we've seen happening in the world, what the key drivers are that are affecting the market. That note is coming straight from our founder and CEO, Angus Geddes, before the Aussie market opens. And we back that up with our recommendations, which we publish in real time. And, that's a big part of the service. That's a big part of what the members are looking for. They're looking for stocks, they're looking for ideas, and they're looking for buying opportunities. And at the moment, we're providing that. So we're providing the strategy, we're providing the direction, and then we're actually providing the recommendations and stocks that we think members should buy. And I know that's something that you talk about quite a bit, Ed, when you're dealing with new investors or members.
Absolutely. Look, we have shortened our delivery over the last 12 months. Members are wanting straight to the point. So the macro, we have a very in-depth brief summary in the daily. And some of our members just read that. And the ones that love to read and really dwell in deeper would click on that, go into the website and read that daily in depth. But some people are just quite busy. I hear a lot on the phone. People just busy these days. They just want the straight point summary And each day now, so there's no more weekly report, even though there's still a weekly report on the website, we're updating stocks daily. So you can see at the bottom there, Westpac, BHP, Hub 24, and also we cover BHP in the global mining, but we have an extensive global portfolio as well. But the fact that we can update stocks daily, members don't have to look at a report with 6 or 7 stocks once a week. They can just review them once a day, and then we do a Sunday summary, and that gives them everything they need to enable them to make any decisions. But we're not reactive, we're proactive. If we put a buy on a stock, doesn't mean you have to go buy it today. You can review it, read it, understand it, put it on your watch list. Could be an opportunity for your portfolio at some point.
All right. So here, you also run webinars, right? Weekly webinars covering the macro, right, Pat?
So the other part of the service is obviously the fact check that we send out every day, the stock market recommendations. However, we're backing that up each week with webinars where we actually have our research team and our investment management team talk to investors and talk to our members about what they're seeing in the market. So this becomes a very interactive part of the service that members also just don't have to read, but they can listen and ask questions about what we're seeing. So yes, Andre, we do one webinar that's mainly focused on macro views on what's happening with the market, and that's held with our CEO and Chief Investment Officer Angus Geddes. And then we flip the next week to a research webinar that we call with our research team, where they're talking more about specific stocks and companies that we've have in the portfolio, companies that we've bought or companies that we're looking at. And this is a very, very, very key part of the service, and one that the members really enjoy and get a lot of value out of. And I think you would say, Ed, that a lot of the members like this service.
Well, the busy members, the members that are busy full-time working or running their own business, watch these webinars. They watch the recording in particular. The members that are obviously retired and managing their SMSF full-time, they usually log in live on a Thursday and watch it live. They're also the ones that usually ask the questions. So the ones that watch the members that watch the recordings, I usually get questions over the weekend on my email about what they've seen in the webinar and some stock questions as well. But everyone uses it the best way they can. The Friday Fat Wrap is a good one for the weekend. It wraps up everything. You might have missed something in the daily, and also the stock update on Sundays, which mentions all the stocks, all the latest buy, hold, and sell recommendations, and some of our traffic light reviews. Now, these are reviews on stocks without a specific recommendation at this point in time. So everyone uses it, the best way they can with the time constraints that they have. But we do all the work. All our members need to do is review it. And that's why, we've been quite successful.
I agree totally. So here, Pat.
So I think Ed touched on this. At the end of the week, we kind of put out a fat wrap for members where we try to talk about something that was pretty key during the week, and we try to summarize that all in the fat wrap note. It comes with a cover. We try to be creative with that cover and lets everybody get a review of what's happened with the week. But some of the benefits of the service we spoke about were the fat chat, which you get every day. We do midweek alerts, so if we have stocks in the portfolio that have moved a certain amount up or down, we get those emails out to members to update them on that. From time to time, we do a podcast where I'll talk with Angus, or Angus will talk with someone else in the company, and we'll just talk about the markets. This is another good thing, as I think Ed pointed out. Everyone has a certain amount of time that they can dedicate to reading or listening to services. So when we do a podcast, it's quite good that members can listen to it over the weekend if they're out for a walk and they just want to tune in for a little bit. It's another benefit to the service. Plus, we have a dedicated account management service whereby if you have questions, you can ring in and you can talk to us. So we're here. We're looking to support. We provide a lot of information for members, but we also back that up with telephone support. And Ed, I know you do quite a bit of that.
Yeah, and we have a service team on the main line as well, but most members that have been here for a long time know who their account manager is, and we provide that level of service. It's a big part of why members join, is that you get to speak to someone, you can ask questions, get them answered. A lot of it's done on email, and you go along and keep managing your own portfolio. We have a lot of members that have stockbrokers and financial planners as well that use us as a perhaps a supplementary part, because obviously they're paying a lot of money to their brokers and to their financial planners. So they want to make sure they inform themselves. So when they have these conversations about stocks or about their portfolio, they let their advisor know that they're actually getting research, they follow research, they understand what's going on in the markets. So they're not treated like guinea pigs, I guess. So that's a big part of what I hear over the phone as well.
That's true. Plus, it's always good to have a different opinion, right?
Yeah, there's no monopoly on advice, especially if you're managing your own portfolio. You know, the more advice you can get, the more opinions, you know, the more views on particular stocks or sectors or weightings, it's only going to help you at the end of the day.
For sure, for sure. All right. So here on stock market recommendations, Pat.
I think this is just highlighting to investors that are looking to take out a membership with fat profits. This month, we've had over 7 new buy recommendations. We've added 2 new companies to the portfolio as a buy recommendation. We highlighted one specific company as a traffic light, which we do from time to time. It's potentially not a stock we're ready to buy now, but it's a stock that we're looking at, and it's a stock in focus. And we've got an extensive watch list of stocks right now that we're looking at, stocks that have come out of the reporting season. We haven't really dabbled into the tech stocks too much, but they're starting to look attractive to us and they're on the watch list. So there's a lot of things happening. There's a lot of opportunities and there's a lot of good things happening with the service. And I think, Ed, you would know a lot of the members have been pretty excited about the buy recommendations we've put on, how the stocks are performing, 2 new companies we've added, and it seems to be heading in the right direction.
Yeah, we have been quite conservative. I mean, Angus was at one stage 30% cash in his funds that he manages. So he started telling members that he started to deploy cash into the markets. Yeah, there are people out there, the skeptics or the bears, saying, "Oh, I'm just waiting for the next crash." Well, the only crash I've seen in the last 2 years was one in COVID, and it was a pretty deep one in June 2022, and that was after a massive rally in 2021, where the market was well and truly overheated. And the speculative sector got absolutely smashed. So the start of 2022, people were sort of cautious. They were sort of reeling as well. There was a lot of stocks that were absolutely slaughtered. And that's what happens when you take too much risk in the market. But it's consolidated now. The index was up 10% in the last financial year. And investors are starting to deploy that cash again. This reporting season's delivered a mixed bag, but the mixed bag has created quite a few opportunities. So Angus, I think, is down about 15% now, he's mentioned to members. So he has already deployed about 15% of that excess cash that he's been holding for the last 12 months. And that's been delivered to members in the daily and weekly research. So that's 7 new buys is probably the most that we've had in 1 month in the last 12 months, Pat. And we are starting to get a bit more assertive. If stimulus arrives in China, that's going to cause a rally on the ASX. A pretty big rally, and that's what most analysts are looking at the moment. And if that comes, you've got to be prepared. You've got to be in the market to take advantage of that. You can't be reactive; it'll be too late. So we're anticipating a very busy quarter coming up to wrap up the year.
Yeah, and I want to add from the research side, we do have a very healthy watch list, and that's from time to time when stock becomes increasingly attractive, we do have the traffic lights, right? We do issue reports, and it really helps for the members to stay active, so that because we're doing continuous publishing, that means that from time to time there will be new names right on the web page, and that really highlights the value, right? Like We're
Yeah,
always on. Yeah, we're
you
always
can
on
put those
top.
in your watch list. Yeah,
Oh yeah,
most members, Andre, they put them in their watch list. Every time we do a traffic light report, they put it in their watch list and they monitor it and wait for the next update. And at some point, we may initiate a buy recommendation on those stocks.
that's right. That's right. All right. So here, playing defensive with energy. You guys want to talk about energy?
Sure. And I think, this is something that we've been pretty active in recently. And I think Ed mentioned that, Angus has moved from a very heavy cash position of 25 to 30%, where we've now down to that 10 to 15% cash position. And the money started to move into energy. We're playing it defensive. We think the energy sector provides a great opportunity for members to deploy some cash and pick up some recommendations. We have several buy recommendations for members in the energy sector. Another sector we've really looked at recently is uranium, which has excited a lot of our members, and we have a few buy recommendations for them to get exposure to. And the healthcare sector. The healthcare sector also is a way to play the market defensively, and we have a buy recommendation and a stock in focus in that area now, and we'll probably see some more activity in the healthcare sector. But energy, oil, uranium, healthcare, all sectors that we have a positive view on, and all sectors that we've been active in, and we have current buy recommendations for members at this point in time.
Also the lithium and the battery sector, Pat. There is a massive interest in that sector, and when you see the volumes coming through in the small caps, it's all lithium at the moment. That's where the money is, and renewables as well. Yeah, I picked up some research recently which explained, why graphite has been falling substantially over the last 12 months, and the leader in that sector is Syra Resources. And people just scratch their heads and say, well, graphite is definitely the other side of the lithium battery, right? But what China's been doing, they've been using oil while the oil price has been so low in the last 12 months. That's now changed. So they've been using a synthetic graphite to build their batteries in their electric cars. And that's the reason why the graphite price has remained so low. That could easily shift and turn over the next 6 to 12 months as the oil price continues to consolidate around that $80 a barrel. Now, if it starts pushing towards 90 and 100 again, which could easily happen, you're going to see some interest in other commodities, not just lithium. Now, you could see graphite and cobalt and all of those other rare earths in particular. The rare earth sector is starting to get a lot of activity at the moment. So that's where the interest is in the small cap sector, the smaller end of the market. So that's an area that we're covering quite extensively in our mining report, our global mining report. And our biggest winner, of course, is Azure Minerals, AZS. This is a stock that we recommended in February this year at 20 cents. It's a stock that we've been covering for over 10 years. The stock is currently sitting at around a $2.70 mark. It's a 20 bagger. Everyone would know 2 years ago, we also picked Chalice Mining. The buy there was 31 cents, another stock that we covered for 10 years. The stock is currently trading around that $6 level, but Chalice did rally to $10 a share. So we picked those two. They're the top two lithium and gold and commodities, I guess, success stories, I guess, in the last 2 years. They're both 20 baggers. In the case of Chalice, it's about probably 100 bagger, but we're quite proud to have exposed those stocks to our members. And I know members that have made substantial, and I'm talking substantial profits on those stocks, well into the six figures. They took a lot of risk and they kept accumulating stocks on the way up, and they've definitely got the return. So hopefully there's a few more in there that we can present over the coming months to members and also to new members of our service.
Yep, and that really is one of the benefits of having a team picking stocks for them, right? And of course, having the patience to ride it through. All right, so on crude oil, if you take a look at the technicals, you can see that since peaking at over $120 per barrel, the oil price did move in a downtrend, but the $70 level has proven to be a very good support zone, and you can see that at least in the last you know last couple of weeks, no, not just last couple of, not last, like, how many weeks is this, like, just a series of green candles. It was when OPEC plus did good on their promise to cut production, right? Recently, last two trading sessions, there has been some selling pressure, but uh, it has, the price has shown to have found a new base. Instead of 70, it's starting to, the $80 level is starting to look like a strong support zone, right? What do you guys think?
Yeah, well, that's why we've got a number of energy stocks and oil producers on buy recommendations at the moment. We're bullish on this sector. Fat Profits is bullish on energy. We're bullish on oil, and we've got a number of good quality companies in the portfolio that we have buy recommendations on. So,
Yeah,
we're very focused on this area at the moment.
yeah, our top picks in this sector have all performed, Pat. They've all delivered outstanding results. So we're very positive on the stocks that we cover. The smaller end of this market has been left behind. It's just not performing. But the stocks that we cover have done very well. So we're still going to be bullish on crude oil.
That's right. Okay. So here's Santos. Ed or Pat?
Well, I
Yeah,
think this just highlights one stock that we've had in the portfolio for a number of years. And we currently have a buy recommendation on this stock, and this stock's done very, very, very well. As Ed mentioned recently, you can just look at these numbers. I mean, their performance has been great. Their free cash flow, profit after tax, underlying profit, and it's a good company. It's a company that we recommend and we think members should have exposure to. And Ed, I'm sure it's something that you hear a lot of people that have bought it have been happy with it.
Yeah, the dividend was very solid this time around as well. It's been steadily growing. It's got all the foundations. It's been around for a long time. It's been consolidating and growing. They've kept their costs, the inflationary costs, they've kept them low, which is good. They're big enough to do so, but some of the smaller players in this market have not, and that's why they're not performing. So they've managed inflation quite well and inflationary costs quite well, and their output costs and profit and loss, it's all there. The underlying profit. You look at these percentage numbers. Profit after tax was down 32%, and the underlying profit was down a bit, 37. But look at the dividend there. Look at the 8.7 US. That's what members look for. That's what investors look for. And also their outlook. The outlook and guidance is quite strong. So they're expecting another 6 months, and that's why we put a buy on the stock. We expect the stock to continue to perform.
All right. And on the uranium sector?
So we touched on this earlier. Uranium's become something that we're very excited about, and we believe uranium is poised for a breakout to the upside. With that in mind, we've recently added 2 new stocks to our portfolios for members to get exposure to and to hopefully benefit from the breakout in the uranium price. And, since we've initiated coverage of these uranium stocks, we've had a lot of members very excited about it. And we think possibly they've moved into those buy recommendations that we've made. We still think there's a good opportunity here. So if you became a member, you would get access to those recommendations straight away.
Yeah, it's one sector, Pat. Look, it's not for everyone. I have a lot of members on the phone that are very environmentally focused and ethical investors as well. So we do take that in mind. So this sector is not for everyone. So you just got to keep that in mind. Not all investors would invest in uranium, but investors that usually invest in commodities and renewables, lithium, and the likes would probably take this sector a lot more seriously in regards to their portfolio.
All right. And next up is a healthcare name.
So we spoke about healthcare being a defensive sector and a way to play the market in a defensive position. Sonic Healthcare is a company that we cover. It's a company that we have a buy recommendation on. It's a very stable, consistent company. Its performance has been very good, and we like this. We like this sector. We like this stock. We're pointing this out to investors today. Here's another idea that we have, but we have many, many other opportunities for investors in our portfolios at this time.
Yeah, good success story, Sonic. I remember, I've been here too long, Pat, but I think we covered this stock at a few dollars. It was like $4 or $5 when we initiated coverage. And then we went aggressive at around that $10 range, and it's just kept going up since. So it's been a great success story for us, and it just keeps growing. And we've got a plethora of stocks in our portfolio that just keep growing. And yeah, some members say, "Oh, it's too expensive. It's too expensive." But when you look at the valuations, the metrics, if their earnings are continuing to grow, the share price will follow, and that's what's happened year on year. You look at Qantas. Qantas, people scratch their head as well, but this one here, it's all about the fundamentals, and the fundamentals deliver that share price growth, and that's what's being delivered here. So we do have a buy on this stock for members in the current Australian equities portfolio.
Yeah, this is also a good example, of picking a stock that has good long-term value, right? I mean, if you look, you can see on the screen, the important metric here is the base business revenue. Because of course, Sonic Healthcare benefited from COVID, right? That's why you can see a big revenue number in FY 2022, and it did drop because reopening post-COVID environment, right? But the important thing is that the names that we pick have like really good fundamentals that they can deliver value over the longer term, right? And at the very least, Sonic Healthcare is also taking on different approaches, not just focusing on their core business, but also making acquisitions and making different maneuvers or strategies that should support the core business. There you go. You can see here. And like you mentioned earlier, Ed, the dividends have been steadily growing. And this is a good example of a company that is creating value, tremendous value. Because otherwise, how would they be able to support, 30 years of solid dividends, right?
The chart is quite consistent there. It just grows on year, so consistently outperforms year on year. COVID, yes, was a boost, but this stock was performing well in advance of COVID. You got to look there, 2009, 2010, it stabilized, then it went through a period of growth from 13 to 17, 18, and 19. So it just continues to grow, and these are the companies that we like. The long-term members love these stocks because you get about 5 or 6 or 7 of these in the portfolio, and your portfolio is outperforming the market year on year, right? Qantas, yeah, is a good example as well. Not sure if we're going to touch on this webinar, but they just keep growing year on year, and they're just, sometimes these are not the stocks that you would think would be the best stocks for your portfolio, but research backs that up. We present the theme, we present the facts, and then we present it to members, and they can make up their own minds, but the proof is in the pudding. That these are the type of stocks you want in your portfolio, the ones that grow year on year and keep delivering results. And these are our most popular stocks in our preferred portfolio.
All right. So on the technicals, yeah, you can see that it has had a healthy growth for a long time, right? Yeah, only just recently, there's just a red candle, largely because of the COVID drop, right? The drop in COVID-related revenues. But yeah, that's really just a short-term thing. If you have a long time frame, you can really see the value that Sonic Healthcare brings to your portfolio.
Well, it's come back. It's come back to a buy now. So we've had this on hold around that 39 level. well, we took a sell half first and then we placed it on hold. So we took profits at the top. And that's a big part of our service is taking profits along the way. And now we've waited, it's consolidated. See those red candlesticks start bouncing around, and that for us makes it a technical buy. And the fundamentals have been supported during reporting season as well.
Yeah, that's right. Okay, so Pat, you want to talk about past
Well, I think
performance?
we'll let Ed talk about the past performance. I mean, we've been in business since
Yeah.
October 2000, and we've been pretty consistent in relation to the returns we've been getting. And I think this table speaks for itself. You know, what our
Yeah.
returns have been in
Yeah.
relation to the All Ordinaries Accumulation Index. But this is a testament that we've been able to do this for a number of years on a consistent basis.
Yeah, our research portfolio is audited by an external auditor, and the figures they give us are the figures we put on our website, and that's a big part of the trust factor with us. I mean, there's a lot of newsletters out there that might, you know, say that we've done this and that, but where's the auditing? You know, where's the figures over longevity? You know, year 2000, it's now 2023. So I've been here since 2011. These figures are quite consistent. Generally, if we have a slightly negative year against the All Ords accumulation, the next year we rebound. So it's all about timing in the market, but the average returns, and we also have an income portfolio. I'm not sure if we have time to mention it here, but that income portfolio over 10 years has delivered around that 13% per annum. There's 21 stocks in there. Typically, a lot of our members buy that entire portfolio for themselves in their own SMSF, so they buy those stocks individually, and they're able to track those same returns. So, you know, the annualized return since inception, 16.85%. You know, it was slightly higher. It has come back a little bit recently with the volatility in the markets, but against the All Ords of 8%, just proves that our service does work. It does work for our members. You know, you can't buy all the stocks. You know, there's typically around 60 stocks in each portfolio, but generally, if you pick half of those or a quarter of those, you should still be able to get those similar returns. The 5-year rolling return is quite good because it has been a turbulent 5 years. You know, from COVID, pre-COVID, down in COVID, up in 21, down in 22, consolidated in 2023. But we still managed to outperform the All Ords index. And the 1-year rolling return is very solid because we took that conservative approach in the last 12 months, and we've been able to deliver 10.97%. The All Ords accumulative is 3.63, but pretty sure the ASX 200 delivered around 10%, so we're in line with the 200. But the All Ords consists of about 1,800 companies, so we did quite well there.
All right, so you guys want to talk about the subscription service?
Sure, Ed, maybe you could go through this because this is
Yeah,
the
sure.
area that you specialize in.
We've explained it already throughout the webinar. It's pretty standard. The standard membership consists of one report. Most investors will go for the Australian Equities Report. This is typically our most popular subscription online. So most investors just sign up online and get access to this. And then when they realize that we've got the account management service, we also have other reports. We specialize in mining and also global equities. We also find there's a lot of upgrades shortly after they join, because a lot of those self-guided investors do want to talk to us. So the premium membership covers 2 reports. Most members go for Australian equities and mining. And then your savvy investors, generally the ones that are more globally focused, perhaps have a bit more funds to invest with, or have a decent size or a larger size SMSF, would go for global equities and get the platinum membership. Now, with the premium platinum, we've just started promoting our portfolio service again. We've had it on care and maintenance for the last couple of months as we've been quite conservative in the markets. But during reporting season, I've done a lot of portfolio reviews. The portfolio service is generally offered to long-term members first, but we've just opened it up to new members again. So if you're someone that would like a portfolio review, we do that after 30 days of joining. You can send in your portfolio. We'll provide you with a second opinion on your portfolio. and then you can have one annually depending on how many years you're with us. If you join up for 2 years typically, or 3 years, you can have one every 12 months. But pretty much the standard service covers the weekly webinars, the recordings, the daily fat chat that comes from Angus Geddes and the analyst team, the Friday fat wrap, and it covers our main portfolio, Australian equities. The more savvy investors would choose global mining and also global equities. But we can discuss that anytime if you want to show some interest in our service.
Yeah, so yeah, I'm quite curious, like, what kind of packages our members are interested in. So we're running a poll right now on what kind of membership our members would want.
Yeah, just click one of those. We'll get back to you. I can't get back to everyone, but I'll try. Depending on how much interest there is. So I've freed up some time for this, so I'll be focusing on this area of our business later on today. So if you click on one of those, I'll get back to you, answer all your questions. It's a pretty simple process to join. Your email becomes your username. We set up a password which is linked to your email. We set you up, you start getting the daily report, you have full access to our website, you can start using the service.
All right, so we're still giving, we're already getting a good number of responses here.
Yeah, most people, yeah, when I used to do this, I haven't done these for a while. When I used to do this about a year ago, generally premium was our most popular inquiry. And that's the membership that most members joined on. There are other members that wanted to test the waters that would generally just click on standard. But look, if you do join with an account manager, you would still have some support. We have a customer service team on the main line as well, but just depends on which level of membership. But we still provide some support on the standard membership as well.
Yeah, and I think everyone has pretty much voted, so we'll take a look at the results later on. Now let's move on to this one. Ed?
Yep. So generally, we want to give an incentive to investors that watch our webinars. You've taken the time to review our service. That's what it's all about. We've given you some pretty good information that you could probably digest and think about, what you do next in regards to your own portfolio. Most investors that watch these webinars are generally looking at making some changes to their portfolio or putting some new money in the market, or perhaps looking for a new service, an alternative. So we try and keep it affordable. We understand there's cost pressures at the moment. We actually haven't raised our prices. I remember when we did this webinar 12 months ago. It's a little bit higher, but the standard membership, $17.95 for 3 years. We used to offer that for 2 years, I believe. So that's probably fantastic value. $13.95 for 2 years. The premium, which is our most popular webinar, $19.95 for 2 years. Now we're offering that at our standard renewal rate at the moment. So that's what members are paying for 2 years. We used to offer up to 5 years, but we've capped it at 3 years now. So $26.95 for 3 years is great value. That's only $8.95 a year. That's quite affordable. And the platinum is substantially lower than what we used to offer about a year ago. So $25.95. So I believe that's a 1 year price on the website. So we're offering that for 2 years. So that's 50% off. And $32.95. That's great value for 3 years. That's only $10.95 a year. So that $10.95 is less than what we charge for our standard membership on the website for 1 year. That's normally $13.95. So we have dropped these prices quite substantially. So it's an incentive to join. We can discuss those over the phone, which one is more suitable to you. Generally, the savvy, more experienced investors who've used research before would managing an SMSF would go for the longer term membership, and generally your newer members trying it out for the first time would usually sign up for the shorter term membership. But we are a little bit flexible on some of these packages, so we can discuss that over the phone as well. So don't be afraid. If you want a little bit less on some of these, we're happy to be flexible, especially if you're a first time member. I just saw the list of attendees, and there are people here that have been on our database since 2005. So I'm not sure if they were past members, they've used us before, or they've actually just been reviewing us for the last, long time. 2005, 18 years. Wow. And there's a lot there from 2009. That was GFC time. So potentially they're past members as well. And there's a lot of new registrations as well. So hopefully, we can welcome some new members on board today and this week with this webinar series that we're presenting at the moment.
Yeah.
Well, thanks for that, Ed. I think that's a very good summary. I mean, basically we're medium to long term, so a lot of the new investors come on for a minimum of 2 years, but obviously that's a decision they need to make, and the pricing is quite compelling at the moment. So we do encourage anybody that's interested to let us know.
Yeah, happy to discuss.
All right. I think it was a great session, and I'm sure a lot of members would also, want to take some time to talk with their account managers after this. So before we go, do you guys have any last words or messages to the members? Pat?
No, I think that's good. I think we're here to help. I think that's the main thing. We offer a lot of value for money. There's multiple ways you can get value out of our service, as we spoke about, from the daily fat chat to the recommendations to the midweek alerts to webinars to podcasts. So, everybody uses it a bit differently, but there are a lot of ways that you can benefit from a Fat Profits membership. And we've been doing this a long time. We're excited about the market. We see a lot of good opportunities emerging, and we look forward to bringing on some new members to the service, and we hope we can add some value to your investing. That's it for me. Ed, Andre, thanks very much for your time, and I'll let you guys just have the last word, and then we'll end the session.
Yeah, look, same Pat. Look forward to talking to some new members or past members. We get a lot of past members that come back on board with these webinars. Forgot to mention that it is a tax deduction for investors. Just speak to your accountant regarding that, and it can be invoiced to an SMSF or a business name as well. So that's your choice. But look, if you come on board, you'll get instant access to all our current buy recommendations, all our past sell recommendations or profit-taking recommendations. You'll get access to our preferred portfolio in the market. So that alone will be gold because you'll be able to compare that to what you're doing currently. And there will be some ideas bouncing around in your head straight away. So the portfolio service, anyone that's interested in that, just give us a call on the main line. Just ask for Edward. I'll get back to you and I'll discuss that. It's a pretty simple process. Members just email a copy of their portfolio. Some have multiple portfolios. We'll get those reviewed with an analyst, and I'll come back to you with the results. And then you can have some ongoing support after that as well. So they are exceptionally valuable for investors as well, especially the larger portfolios. They generally get a lot out of these. Diversification of weightings, those discussions are quite general. And then obviously you go away and make your own decisions at the end of the day. So we're here to help. Andre?
Well, thanks for that, Ed. Thanks for Andre. And I think that'll do it. And we hope everybody enjoyed the session, and we look forward to bringing you on as a member, and we hope we can add some value to your investing.
Agreed, and I hope to see you all on our regular webcast sessions as well. And thanks again for joining us, and see you next time.
Thanks, Andre.
Thank you, Ed, Pat.